Okay, friends, let's talk about the Fed and what happened this week on the Weekend Update. Okay, friends, let's take a look at the market post the Fed meeting. First up, here's the market the way we've always been looking at it. Red is the S&P 500, orange is the 50-day moving average, purple is the 200-day moving average. And as you take a look, what do you notice? Well, first up, the market has been in a little bit of a downtrend, but really all of this drawdown that we're seeing in the stock market, and it was probably as bad as 5% at one point, nearly all of it came on Wednesday with the Federal Reserve's announcement of what they were doing with interest rates. As I look at the market here today, right now, though, what this looks like to me, this looks like, and if you're a longtime viewer of the channel, and you should know already, this looks like yet another test of the 50-day. And at least as of today, this is Friday at 1:20 p.m. So a little presumptuous here, but it looks like we are going through our testing process successfully on the 50-day. This is completely normal. We did this several times this year so far, and very normal in an uptrend. Uptrends very often test their 50-day, if not repeatedly so. One of the things I will say, though, about this most recent drawdown that we had in the market, I got a lot of inbound from people wanting to sell stuff. And that's okay, but what I think is causing that is way too much news consumption. Investing is one of those areas where you can be too plugged in. And if you are, you oftentimes make a whole bunch of mistakes. So what I would say is if you're watching this video, you want to be a little careful with how often you are checking on your portfolio, how often you are consuming financial news, because this is really, to my eyes, a non-event. So what does the market look like? Looks like a benign, normal uptrend to me. Test on the 50-day, and it looks like it's resolving positively. So everything that we've talked about previously, the melt up, and all the rest of that still seems valid in my mind. But let's talk about that drawdown. So the market had, I think it was the second largest day for VIX gains ever on Wednesday, VIX being the market's fear gauge. And the market went down 3% in a day. And so we can at least unpack that a little bit and ask, why did that happen in the first place? Well, it's because of this. This is the Federal Reserve dot plot. And basically what they did on Wednesday is they said, hey, here's our expectation. All the members of the Federal Reserve got together and they said, here's where we think each individual member would put interest rates for both next year, the following year, and of course, longer term. And the biggest thing that the market sort of picked up on and ran away with was this clustering of dots in 2025, which basically says, hey, the Federal Reserve, as of Wednesday at 2 p.m., basically said, we think we're only going to give 2 cuts next year. And of course, that sent the market into a spiral and everyone was in a tizzy, and CNBC was very thankful for you tuning in to hear about all the ways that they could torture that point. But I'm actually not reading too much into this dot plot, and let me show you why. Here is the dot plot for 2025. So this is what the Federal Reserve has estimated 2025's interest rates would be at. And we're tracking how their forecast has changed from basically December of 2022 all the way through to yesterday. And what you notice here is that a pattern is starting to emerge. And basically, I'm talking about from September of last year to now. What you notice is every time inflation is under control, the Federal Reserve reduces their expectation for interest rates in 2025. And then if you remember, early part of this year, we had a second inflation wave. And so the dot plot as of June of this year, all of a sudden the Federal Reserve said, rates are going to have to be as high as 4.25. Then we got good inflation data and their expectations went down. And then we got bad inflation data. And now their expectations go up. And so what does this look like to me? This looks like to me that the Federal Reserve has no forecasting ability whatsoever, and they're just sort of taking whatever the most recent data is and projecting it into the future. And that shows up in their dot plot. For my eyes, what this looks like, this is the normal seesaws. We've talked about economic weakness for quite some time, and one of the things I mentioned is it doesn't go in a straight line. It's sort of like waves. We're waiting for the tide to either roll in or roll out, but there's going to be times where the economy seems terrible. There's going to be times where the economy seems great. But what should happen in a more, long-term economic slowdown is the tide slowly pulls out over time. CPI works exactly the same way. There are times where the CPI seems hot and the dot plot goes up. There's times where it seems under control and the dot plot goes down. But what you notice is you can see these waves kind of coming and cresting. This is exactly the same way the economy works, because there are times throughout the year where the economy is stronger. There's times where the economy is weaker. And so that's what we're running into here on the dot plot. So what's my take? My take is we're still in a melt up. My take is there is absolutely nothing that needs to be done in the market right now. My take is if you're this plugged into the market that you're hanging on to every daily move, it's the holiday period. I know maybe things slow down, so you look at the portfolio more, but to my eyes, this was very normal what happened this week. So my take as to where we are right now, we're in a melt up till the end of the year. And the reason for that is no tax loss harvesting flow. That hasn't changed. Rate cuts for the foreseeable future. That was maybe in jeopardy as of Wednesday. But now that I've shared with you, the Federal Reserve's weakness in their prediction, I think this is still on the table. And of course, we've got a very large spending plan that's coming through. As of right now, there's maybe some government shutdown jitters happening. I'm not worried about a government shutdown. Not really ever. So yeah. I think the melt up still continues all the way through to the end of the year. I think this week was a little bumpy, but after this week, typically the last 2 weeks of the year tend to be pretty strong. So this would be like Santa Claus rally points in time. We'll see if it shows up. But there you go. That's the market. I'll see you next week for the news review. Take care. Okay, friends, that was the video. Hope you liked it. If you found it informative, good, entertaining, I'd love if you could scroll down here beneath the video and give me a like there. It helps us out with the algorithm. And then if you want to be notified first of anything new that we upload to the channel, if you come over here, click subscribe, you'll be the first to know as soon as we upload anything. Appreciate it. See you soon.